McCarty and members of the task force. I am Terry Hetley, President of Hetley Financial Group in Omaha, Nebraska, and I'm pleased to appear today as the President of the National Association of Insurance and Financial Advisors, and on behalf of the agent and broker community. NAIFA comprises more than 700 state and local associations representing the career and financial interests of 200,000 members and their associates nationwide. Our members have been serving America's neighborhoods and communities for over 120 years, and we have a great deal of experience and expertise on insurance-related matters. I've been serving clients with their insurance investment needs in Omaha, Nebraska for over 37 years. Since 1890, NAIFA has worked to safeguard the financial security of the public for life's big contingencies, including death, disability, illness, and retirement, and to protect the important advisory relationships between agents and their clients. There has been strong support for the services provided by agents and brokers, including acknowledgement from certain consumer representatives and even Senator Rockefeller, who advocated for the MLR provisions in the new law. Our internal NAIFA survey indicated that we process or get involved with 180,000 claims in the course of a year, an average of 223 claims per agent. However, the only recommended solution to address and remedy the abruptly slashed payment for these services is to remove agent compensation from the MLR calculation. In light of the real threat to consumer service created by the MLR, we believe swift congressional action is appropriate and necessary to modify this well-intentioned provision that is, however, having a disastrous impact on consumer service. Consumers will not benefit if agents are forced out of the market and individuals are left without service. Agent-provided service to clients is not transactional. The service does not end after a policy is put in force. In fact, that is just the beginning. Removing or decoupling compensation from the MLR calculation would preserve the valuable services and programs offered by licensed health insurance agents for the protection of consumers. This action would eliminate the incentive for insurers to reduce agent commissions that compensate agents for providing a diversity of services to consumers, and would not have a negative impact on premiums. The MLR requirement has led many insurance companies, as you've heard previously, to reduce agent commissions, in many cases by 50%. Some smaller health carriers have shared their concern that they are not even sure if 50% will be enough. The severity of the downward adjustment in compensation is resulting in consumer access issues. Many producers are simply abandoning the individual and small group health insurance market because it will cost more to service clients than the commissions generated. Operating at a loss cannot be made up in volume. Those agents that have remained in the business are focusing on other lines of business to supplement income and are struggling to provide the personalized service their clients have come to expect and rightfully deserve. Numerous agents with businesses that specialize in health insurance and employee benefits are exploring charging a consulting fee to perform services that have typically been offered at no additional cost to clients. However, many states expressly prohibit a fee to be collected when a commission has been paid. And if additional fees are permissible, they will have an adverse impact, particularly on the middle and lower income consumers who will struggle to pay extra fees on top of their premiums. Consumers are the losers, and they are losing valuable services as agents and brokers attempt to maintain the same high level of service with half the compensation. Generally, agents are small business owners who operate in their own communities. We build lasting long-term relationships with clients based on trust, integrity, and quality customer service. Unfortunately, services to reduce the need and cost of healthcare services, such as agent-initiated and administered wellness programs, are being among the first to be eliminated. These programs require a high level of personal agent service. Individual enrollment assistance is also being reduced. In addition to assisting employees annually with their insurance options, the producer typically will meet with each employee to explain plan design options, answer questions, and assist with enrollment. Employees are added to health plans on a daily basis. Not to mention the countless hours, about 20 hours per week, of mitigating and mediating claims between consumers, healthcare providers, and companies. In fact, many of our members often serve as the extended human resources department for smaller businesses. Licensed health insurance producers simply cannot continue to provide these consumer services without adequate compensation for their time, training, and now more than ever, compliance costs. Treating producer commissions in the same manner as federal and state taxes as a pass-through for purposes of calculating the MLR will relieve some of the financial pressures created by the MLR and allow insurance companies to compensate agents fairly and thereby continue to provide vital services to consumers. Prior efforts to address servicing concerns are not working. While the MLR waiver process allows the impact of the MLR standard on agents and brokers to be a factor in considering whether particular individual markets would be destabilized, it does not appear to be a promising way to address service concerns. Furthermore, the waiver fails to address this adequately and provide any relief in the small group market. Unfortunately, our fears regarding the unintended consequences of the MLR requirements are now being realized. Prompt congressional action, encouraged and supported by the NAIC, would restore adequate compensation for the services that licensed professionals provide to consumers. And finally, if the consumers cannot turn to agents, to whom will they turn? Will it be the state insurance departments? And are the resources available? I want to thank you for the opportunity